Are you a small business struggling with inflation and high interest rates? Want to know what you can do to help you through this difficult time? Keep watching. In trying to control the rising inflation, the Federal Reserve seems invested in increasing interest rates. On June 16, 2022, interest rates were increased by 0.75%, the largest hike since 1994. The Fed also signaled more large rate increases to come, raising the risk of a recession. With rising interest rates on the horizon and potentially no end in sight, how will it affect businesses? Rising rates make it more expensive to borrow. If it costs more to borrow money, consumers cannot buy as much stuff, and a company's revenue can decrease. What can small businesses do to make it through this? Here are some ways to help you through this time. Number one, strategically raise your prices. While people already feel the pain of inflation, they also understand that businesses must survive. To survive, prices inevitably have to go up. It's best to communicate to your customer base why you're forced to raise your prices. Sending out an email helps to show that your approach is motivated by inflation and rising interest rates. Number two, get financing now. Rates will inevitably rise again and perhaps even later in the year. Getting financing in place now before rates rise too high is going to be imperative for many smaller businesses. Some predict that the Fed may raise rates by 2% or more throughout the rest of the year. This means commercial lending could be out of reach for many. Waiting for even a month or two to apply for financing for your business could make it more expensive, so look to get your funding now. Number three, raise your capital. One option is to sell equity. This is where investors provide capital for your business in exchange for equity in your company. The downside is you give up control. Another option is crowdfunding. Sites like Kickstarter allow private investors to contribute money to your venture. Some crowdfunding sites are donation-based, so you don't have to pay the money back. Number four, refinance existing debt. If you have a debt with variable interest rates, you may seriously want to consider refinancing to a fixed rate to limit how much exposure you have to rising interest rates. Number five, finance customer invoices. The combination of rising interest rates and inflation is making it increasingly difficult for consumers to spend as they once did. You may want to leverage those invoices to get cash up front right now. Numerous alternative and online lenders will offer invoice financing or factoring. Do you need financial help during this difficult time? We are here for you. First Union Lending offers numerous financing programs designed with small businesses in mind. Our business loans are fast and flexible, with financing options ranging from $5,000 to $2 million. Call today to learn more about our various financing solutions to help your business grow and become successful.